Hello and welcome. You're watching Countdown on Bloomberg Quint, India's first digital live streaming business news service. I am Arnab and here are the top headlines that we are tracking in this hour. It's a lackluster day of trade for the markets. The Nifty trades close to the 10,900 mark. All sectoral indices trade with gains. The Nifty Metal Index is the top sectoral gainer. 4 of the top 5 stocks are from the metals pack. Stocks like Muthoot Finance and Bata are trading at a 52-week high. And JK Cement has completed its QIP. The company had lost 7.34 million shares at the floor price of 609.8 rupees per share.
Okay, let's see what's happening as far as the broader markets are concerned. You can clearly see that the Nifty has been fairly in a stable range at this point of time. It's managed to recover. It was trading at the day's low a while back, but then again managed to come in slightly higher. So it's hovering around the 10,850 to 10,900 mark in trade. Similar is the case as far as the Sensex is concerned. If you're looking at some of the trends that's happening as far as the Nifty Bank is concerned, again a lackluster trade. It's light, and to be fair, it's 31st, and most of the fund houses are shut. So the flows actually are much lower on the side. Even if you take a look at the turnover, will be on the lower end of the market. The mid cap and the small cap end of the market have actually managed to inch in slightly higher or do slightly better than what the Nifty or the benchmark indices are doing at this point of time. Let's take a look at what's happening as far as the Nifty is concerned, which are the important stocks that have managed to move up. If you can pull up the heat map again, some of the metal counters have done well. It's a rebound day for the metal counters. So JSW Steel, Tata Steel, Vedanta, Hindalco. So the top 4 counters that are gaining on the Nifty are all metal counters that have managed to move up. Sun Pharma has moved up. After a while, you're seeing Indiabulls Housing Finance move up in trade, but otherwise it looks rather lackluster in trade. The HDFC stock is down in today's trade, and the biggest drawback on today's is Bharti Infratel, which is down almost 1.7%. Let's pull up the other information that we have, and clearly you can see the trend that's actually moved in on so the Nifty at this point of time is looking rather stable at this point of time. The advanced decline is in favor of the advance, and from almost 2 or 3 hours, it's been pretty stable. So there's been no change. It's been a rather lackluster trade in market. Even if you're looking at the turnover, as I pointed out, since it's the 31st, most of the domestic foreign funds are obviously shut. Most of the domestic funds are also working under time, and so this, that's at low at this point of time. What's aiding? Infosys is the biggest gainer. The HDFC stock is down in trade. Reliance has not contributed. So extremely lackluster. The Nifty is up almost 23 points at this point of time. But Agam, what's happening on the FNO side?
Again, as you already said that, turnovers are on the lower end of the things, considering it is still about a couple of days before we can start seeing a pickup as we move into the year end. We aren't seeing too much, and the turnovers, explain everything. 3 lakh crore rupees at 2 o'clock on a Monday morning. That's hardly anything at all, considering what we have been used to in the recent times. That said, we are still seeing an accumulation and unexpected lines in the Nifty futures coming down to the Nifty banking futures. That is where we're seeing, about a 12% increase in OI, even as there's very little change in the underlying. Let's take a look at the WIX, and the WIX, has risen, despite the fact that we have seen, I would say, consolidation, range-bound trade, and Nifty not moving above the mark of 10,900. The WIX has, however, seen an increase of around 4% there, by indicating an expansion in option premiums. Speaking of options, it is the 11,000 put, which is seeing unwinding right now, and that's followed by a lot more writing in the higher levels, such as 11,100, 200, and 300 calls. In fact, 11,300 call is the one we are seeing a very active writing coming through. Moving on, where does it leave us when it comes to your OI? Max OI currently with the call, it's at 11,200, but on the lower end, it's at around 11,500, which should give you a rough range within which you can expect Nifty to move within in the near term. And in terms of stocks, we have Chennai Petro, which is advancing in trade, looking at fresh longs coming in. Followed by Chennai Petro, we have some traction in Container Corp as well. Not a stock that usually shows up on your list, but it is seeing a 3% advance in its underlying with accumulation and open interest. JSPL is the other one, which is also showing a lot of strength in the markets right now, in the broader markets. 15% added to longs. And finally, there is something like an Ujjivan Financial, another continuation of a trend of what we've seen over the previous few days. Ujjivan Financial, of course, also continues and advances. So we are looking at a lot of longs coming in through, and we will be keeping an eye on a whole host of these stocks. But it's the first day of the week and the last trading day of 2018. Let's kick off today's countdown with a global voice here. Joining us on the show now is Arnab Das of Invesco. Arnab, thank you so much for joining us, and taking the time out and speaking to us on Bloomberg Quint. Let's start off with the global concerns, perhaps the outlook here. What are the variables that you are tracking, and if you could give us an outlook on how you think things could pan out, and what could be crucial over the span of the next 2 or 3 months?
Okay, well, so I think number one has to be the tensions between the United States and China, trade in particular, but also geopolitics. You'll be aware that they've given 90 days until March to reach some sort of an arrangement to avoid the next round of tariff increases. I think probably the most we can hope for there is an agreement to disagree and to continue the discussions. It's primarily about trade at one level, but trade is probably only the tip of the iceberg. It's really about geopolitical and geoeconomic rivalry. So it's going to be quite a complicated story that probably unfolds over many years, if not decades, rather than a few months. So that has to be number one. I think number two is tensions within the European Union. Things in Italy appear to have calmed down quite a bit after they've made some concessions on the increase in the budget deficit. So that's to the good. However, the thorny issue of Brexit continues to be a serious problem and is an important event risk for the end of March. And then, of course, number three, I think overshadowing everything is central bank policy normalization and the Fed in particular, and what that implies for global growth and inflation. So I think if you put all of those things together, you have quite a lot of issues, uncertainties, risks, and challenges for the global economy and the markets in 2019.
Good afternoon. What's the big, some of these factors are pretty much known. Is there any joker in the pack that you're saying that, people are not factoring in this point of time that could, either make or break 2019?
I think first of all, it's a very good point that these issues are well understood, that people know a great deal about them. However, I think the uncertainty around what might happen, particularly say with Brexit, is still quite high, and that accounts for a lot of volatility, idiosyncratically, of course, in the case of the UK and sterling in particular. So although these issues are known, I wouldn't say that the outcomes or the probabilities around the outcomes are very well priced in, right? There's still a lot of uncertainty and a lot of volatility going on from time to time as the perceptions of the risks changes. As for a joker in the pack, I suppose it's possible that, people are quite concerned about all these issues, and that the joker would be that things turn out to be considerably better than we expect, that the global economy does better than we expect, that the trade tensions alleviate, that Brexit either doesn't come to pass or there's some sort of an amicable resolution. I think, kind of the upside scenario at this stage would be, I think, the big surprise, right? We have a lot of valuations that have come under pressure with all this volatility in Europe and in emerging markets. And of course, very recently, a lot of volatility and valuation correction in the United States as well. So I suppose you could make the argument that the risk is to the upside. I'm not sure I would bet very much money on that, however.
Right. Arnab, in that case, if you could tell us about what you can expect with respect to fund flows. I know that you don't actively track this, but if you could give us an idea about what your rough expectation or estimates may be. Do you think that there will be fund flows in emerging markets, say, in the next 2 or 3 months, or do you expect the slowdown to continue before we get clarity on a whole host of issues that you've spoken about?
I think the slowdown is likely to continue. It's probably more likely to be concentrated in the retail part of the market than the institutional part of the market. I think the institutions typically institutional and investors tend to take the long view and try to look at the valuations as an opportunity rather than a reason to run for cover. I think the challenge for them is that all of these issues do imply both, like I say, sort of cyclical and structural challenges to the outlook, particularly for emerging markets. So I think the valuations are very attractive, and that'll probably encourage, discourage significant outflows from institutional investors. But we probably are in a position where we'll need to see more clarity, or at least some more progress on these issues before we see important inflows. I think another possibility is that if we have more convergence in the global economic cycle, so if Europe does a bit better than expected, if China does a bit better than expected, and that helps with emerging markets, the rest of emerging markets besides China, that could help close the gap in terms of economic performance and financial performance with the U.S. I think there's still a lot of concern that what we are more likely to see is both downside surprises in growth in the U.S. and downside surprises in growth in the rest of the world. And the Fed continues with this normalization. We can debate about whether it's 1, 2, 3 rate hikes or whatever it's going to be in 2019. But that the normalization continues from the Fed, that the pricing of that first ECB rate hike gets pushed out further as Europe continues to come under pressure from the trade tensions, from the slowdown in China. And so there's an important risk of divergence continuing. If that's incorrect and convergence, monetary policy convergence reasserts itself, then that could unlock some inflows because it would imply a weaker dollar and easier financial conditions for emerging markets. But again, I don't think that's a central scenario. It's an upside risk scenario.
Arnab, what's the foreign institutional investor telling you when you speak to them about India, especially given the political situation that we are in? What are they betting on for the political side? And let's say the BJP comes back to the power or doesn't come back to power. What's their analysis on the same?
I think the so let's say the weighted average institutional investor is sort of consistent with the consensus in the broad market, right? Which is that the BJP will retain the largest position in parliament, but will not have a majority. I suppose on the positive side, this may constrain the Modi government and Prime Minister Modi himself's penchant for experimental, kind of shock therapy type of policies like the demonetization, or the challenges between the government and the Reserve Bank. But I think a lot of those issues have already come to the fore, right? I mean, we've had this demonetization shock. It would appear that that you could argue that the costs have outweighed the benefits, or at least it's an open question. It's pretty clear that it hasn't panned out quite the way that the Modi government had hoped and had argued that it would. And similarly, there's a reputational cost that's being paid in terms of the credibility of the government and the credibility of the RBI, given Urjit Patel's sort of untimely resignation, whatever the individual personality issues or interpersonal issues might have been. There's still an institutional cost. So I think that people are concerned in many respects. On the other hand, they are, everybody does agree, I think, that India is going to be the fastest growing large economy in the world. It's a relatively closed economy, so relatively insulated from the trade tensions. The main story is about domestic demand. The fall in the oil price is going to help with the current account deficit and with the external financing picture. So there are some quite good things. There are some quite important concerns about the capacity of the Modi government, on the one hand, constrained in taking these experimental policies, on the other hand, also constrained in proceeding with crucial reforms that haven't happened yet, such as land reform and labor reform. So I think those seem pretty unlikely to happen. I guess that would translate into an expectation that India will continue to generate growth, potential growth, trend growth in the high single digits, but not get up into the kind of double-digit range that we saw during the Chinese economic miracle or the Brazilian economic miracle or the Japanese economic miracle, right? So still very strong performance, particularly in a world that is growing more slowly than it used to, but still not quite living up to the hopes that had been hyped up in the past.
Right, Arnab, I'm just going to go back through the U.S. Trade war, possibility and the sanctions here. I'm going through one of your blogs right now, and you suggested that the weaponization of trade, finance, and the U.S. dollar via sanctions. What's the update here? Has your view changed over the last 3 or 4 odd months, and how are you seeing things develop from how things stand right now?
Well, I think this weaponization of the dollar, this unilateralism and rather more aggressive approach that we've seen from the Trump administration, particularly in 2018, it doesn't seem to me likely to disappear. I think it's a bit more nuanced than advertised or than tweeted, like as we've seen, for example, with the Iran sanctions. That helped to drive up the price of oil quite sharply. And then, of course, President Trump himself personally was quite concerned about that, tried to manage or manipulate even the price of oil down. And then the administration ended up giving out waivers, including to India and China and many other countries, resulting in a market that suddenly seemed oversupplied with oil. So I think that all of this adds up to this aggressive stance, this unilateralism, this if you like, this kind of war cabinet of very hawkish people. The Pence wing in the administration itself, the Pompeo wing, the Bolton wing, having a lot of sway with President Trump and with U.S. policy in general, but also some mitigation as the more aggressive stance and some of the more aggressive potential actions are somewhat diluted, right? I think we'll continue to see that. Now, that's not to say we're going to return by any means to a much more multilateralist kind of general approach. I think the message of domestic politics for President Trump himself is quite complex and challenging on this front, right? The big picture here is that he had collapsed in the polls in his first year in 2017. He became very disruptive after the tax reform success in 2018. And he ratcheted back up himself in his personal approval ratings. It didn't work for the midterms per se, although we stopped short of a blue wave in the midterms. Still, the message, I think, is that President Trump is now in line with second-year, first-term presidents after a first year in which he was well below first-year, first-term presidents in his own personal approval ratings. So I think the message for him personally is that this disruptive stance, this aggressive rhetoric, tweeting, and this unilateralism in foreign policy works, right? And as the House is under the control now, or will be under the control from January of the Democrats, the domestic part of the agenda is likely to be more gridlocked even than it was in the past. Right, so that implies that he will be more adventurous with foreign policy and foreign economic policy in particular, where he has a lot more sway than in domestic policy.
What about crude, Arnab? How will that play a factor? What's your own assessment and bet on crude?
Well, I think, like I was just discussing, right, the market in crude, has been driven quite a bit by foreign, by U.S. By geopolitics and U.S. policy vis-a-vis Iran and vis-a-vis Saudi, and also, of course, the advent of U.S. shale as a much more important force. I think what we're seeing is a structural change in the oil market where OPEC at the margin has decreasing influence, and market players, shale producers in particular, and the cost of capital for shale producers, as well as the actual oil price, have a much greater influence on supply. Right, so OPEC, of course, continues to have a significant amount of influence, but I think with the symbolism, although the direct effect is quite limited, of Qatar's exit, and the challenges of coordinating within OPEC, the challenges of coordinating between OPEC and Russia continuing, and this advent of the importance of the U.S. as a producer now, the largest single oil producer, the market is much more in control of the oil price than OPEC was. So I would suggest that implies that global demand conditions will have more of an influence, as well as supply constraints from OPEC or supply overhangs from the U.S. and from shale. Right, demand will matter as well. So right now we have a fairly low price of oil. As we've been discussing, expectations for the global economy are weak, are tending down rather than up. If that changes, there'll probably be some upside in the oil price. I think demand at the margin is going to play a bigger role than all these supply issues have been dominating the market for the last several months.
Okay, Arnab, we leave it at that. Thank you so much for joining us and taking us through what your outlook is in terms of factors that affect our global markets. Of course, we'll keep an eye on a whole host of some of those variables that Arnab has discussed with us. But moving on, let's shift focus to tea companies now. And a fall in production in 2018 is likely to result into a surge in prices in the coming year. And reports suggest that production is likely to be lower by as much as 10 to 15 million kilos in this year. And let's take stock of what's going on in the tea industry, perhaps the tea prices. We're in conversation with the managing director, Mr. D.P. Maheshwari of Jayshree Tea. Mr. Maheshwari, good morning and thank you so much for taking the time out.
Good morning.
Well, from what we understand is that the plucking season is now well and truly over. Can you tell us about how you're seeing tea prices trend at this point in time?
Well, you see, October ending figures are out and we are behind by 10 million kilograms. In November, from our available information, we'll lose further 25. And in December, because as per Tea Board's instructions, production has been stopped prematurely, so another 25 will lose there. So total 50 million kilograms we will be short in production, and add to that 30 million kilograms is the new demand created every year. So at year end we will have 80 million kilograms shortage in the pipeline. Now we had our expectations were with this declaration and shortage being in hand, prices will move up. But till now, the prices for bottom of the market only has moved up. There, nothing is available below 120 rupees a kilo, whereas last year at the same time, you could get tea for 95, 100, 105, like that. But we expect in balance period, medium teas and high-grown teas also will move with the market. This is what is to be seen.
Mr. Maheshwari, can you give us a sense of, how much the prices have moved? You said that there is shortage and from October pretty much there was a stoppage because of the Tea Board circular. What was the prices in October and how much has it reached now? What's the increase in prices?
As I told you, the prices have increased only for the bottom of the market. That is the low quality teas, which were selling for 90, 95, even up to 100, are now selling around 120. 115 to 120. So let us say 15 to 20% increase in that segment of the market. But other segments like medium teas of Kachar and high-grown Assams, there the prices are yet to move. In fact, the prices, if anything, are same as last year or lower than last year. We expect the market will move now in the balance period.
Okay, so Mr. Maheshwari, if we actually distinguish both these segments of tea, that is the lower end and the higher end, how can we expect tea prices to move for both these segments as we move into the last 3 quarters of this financial year or the first quarter of 2019? What is your expectation? Because you're saying that the higher end tea... Yes, please go on, sir.
Yeah, first quarter of 2019, when the new season teas will start coming, we expect market will be strong by at least 30 to 40 rupees a kilo, which is roughly 15 to 20% for the high growns. And bottom of the market is already strong. So if they maintain that, it should be good enough. Medium teas and high grown teas should move, and we hope it will move.
Okay, Mr. Maheshwari, so let me ask you, is this cyclical in nature or is this something because of the demand-supply situation, the dynamics have changed?
Well, you see, this is a typical way market behaves. Normally, any shortage scenario, the high quality must go up. But this time it is the bottom of the market which is moving up. because people think that type of tea will not be produced since production has been stopped. So they want to stop that first. And then next will be the medium and high price tea, where prices are bound to go up.
All right. So, Mr. Maheshwari, how does this impact your financials? What can we expect for the whole of this financial year then?
See, I have given you a general scenario for everybody. If you ask company-wise, each company's equation is different. As far as my company is concerned, we don't make those lower quality tea. We are only into medium and high grown. So market advantage is yet to accrue to us. But then we had known this scenario, so we had very mercilessly cut our cost, and our production is higher than last year. So my results are going to be much better than last year, as you would have seen in the second quarter also.
So, Mr. Maheshwari, let's play out a conservative scenario here. You're suggesting that for now the high-grown segment prices have not moved up. So then my question is, let's just assume that the prices still stay stable wherever they are and possibly don't lose any in terms of price. In that case, based on that, what can we expect from your perhaps top line, perhaps profitability as we move into the final quarter of this financial year?
See, I expect that prices will definitely move, especially in the March production, which comes under new season tea. And we expect a heavy production in March this year. So that should help. But in case prices do not move, my company will leave. We have already taken precautions, so we will do all right. But general scenario will be very, very challenging. I can assure you of that.
Okay, Mr. Maheshwari, we'll leave it at that. Thank you so much for joining us and taking us through the outlook here. Thank you, sir. Yeah. So, well, moving on, of course, it is the end of this year. So, how different will 2019 be? And what are the factors that one should watch out for? Bloomberg Quint has done a detailed poll among 27 market participants, and Yatin Mota is presenting us the first part of the three-part series, starting with where the market experts are expecting the Nifty to go within the next year. Yatin, good afternoon.
Afternoon, Agam, and as you're mentioning, a whole host of market experts, fund managers, research analysts, head of research, almost 27 people surveyed. Of course, today we'll be doing the first part wherein we'll talk about the Nifty levels, the political scenario, as well as what is probably the joker in the pack. But starting with what we made out of the poll when it comes to the Nifty levels, on the lower end side, probably 10,000, 10,500 is what most of the market participants are building up. Of course, this year we will have probably in 2019 we'll have the general elections in May, and probably that is one point wherein markets expect some kind of volatility, and that is the reason why 10,000, 10,500 is the broad range that the market participants are talking about. To be specific, a majority, 60%, do expect the market's lower end range to be 10,500 to 11,000. When we talk about the upper end also, here the scenario is that on the higher side, 11,000 to 12,000 is the kind of level that people are watching out for. Of course, 13,000 Nifty level would be a blue sky scenario. Market do expect a bull case, upside of 10% when it comes to the upper end of the Nifty range. But probably 2019 would clearly depend on a lot of events such as the general elections. Talking about the BJP government, Modi is something that the markets are betting on. Of course, when we talk about three scenarios, the number one scenario would be BJP standalone getting a majority. Scenario two will be that how really will the allies support the new government, and number three would be what if the Modi government doesn't return to power. So we have done these three analyses wherein a 5 to 10% gain is seen if BJP is able to get a clear majority. Similar is the kind of upside that market participants do believe if there is a coalition government. So 5 to 10% is a kind of gain once probably we'll have a coalition government in the center. What if Modi doesn't return to power? There the market participants, a majority of them, do believe that there could be a downside of nearly 5 to 10%. So that is the probably the worst case scenario.
wherein the current government doesn't return to power. So, after this slide, you will probably see that as well, wherein, the market participants do expect, a majority of them, a fall of up to 5%, but there are scenarios wherein a 5 to 10% fall is also expected. So a majority, does expect a 5 to 10% kind of a correction in the worst case if that happens. Also, the joker in the pack, and to our surprise, it is the trade war. Almost 1/3 of the participants do believe that trade war is, probably one of those risks to the current, market scenario, which could lead to some, short-term blip into the marketplace. And equal importance is also given to the crude prices. So clearly, the crude prices as well as the trade war scenario, which is a known unknown, would determine the future course of the stock markets. Of course, the other being the rupee volatility, US Federal Reserve, how does it really keep the interest rates? And finally, also the RBI government relations is something wherein the participants voted, that could also be something that they will be watching out for in 2019.
Okay, many thanks for that, Yatin. We'll certainly watch out for part 2 of your poll when it comes out tomorrow. Before we move on to the technical guest, a couple of stocks I want to highlight. Kotak Mahindra Bank has moved to the highest point of the day. Remember, it's the D-Day today in terms of change in shareholding norms. No one knows what will happen today. Kotak Mahindra Bank, on its part, has filed a writ petition on December 10th, and they stated that their stand is right. This hearing will be on the 17th of January. Till that time, there will be no clarity, but you never know what the RBI probably will come out today. So there is a lot of confusion. Kotak. The other counter I want to point is Muthoot Finance. Trades at the highest point of the day and has moved to a fresh 52-week high. So there is traction that's happening on the counter. And GM Breweries has surged 8% suddenly. So there's a big move that's happened, and the spike has come in the last few minutes. Remember, GM Breweries will be one of the first companies to report its earnings over the next, I think it's on the 3rd, if I'm not wrong. So there is traction that's happening on GM Breweries. But Hemen Kapadia of KRChoksey joins us in the studio now. Good morning, Hemen. What are you telling your clients on investing on the benchmark indices?
A very good morning to you, Darshan. I think we're very script specific, frankly speaking, and on technical parameters, I think the world markets seem heavy. We stand out standalone. I'm not sure how much. So I think we are very, very script specific rather than Nifty or Bank Nifty specific, Darshan.
Any option strategy that, if someone wants to take a risk-free strategy, anything on the option side that, looks good to you?
Yeah, I think currently what is happening is market seem just a wee bit tired, just a wee bit. I'm not saying there's going to be a big correction. 11,000 still has significant OI. We saw a lot of writing at 11 and 11.2 on Friday. So I have a 11,200 call and 10,400 put. I have a strangle to sell because neither looks like coming, and only because I see a maybe 50-70 point correction coming in the next couple of trading sessions. So I'd say below 10,800 I would square off this position at a profit.
Okay, that's the second analyst today, Darshan, that we've had who was suggesting selling the same strangle or a similar one. And of course 11,200 is the popular option, call option to be sold right now. But Hemen, let's talk about stocks as well. You have 2 buy calls on your list today.
Yes, I would not be very comfortable shorting because stocks pop up like popcorn. So standalone, I think Jindal Steel and Power looks pretty interesting, Agam. I think we are seeing the process of a medium-term bottom in place. Short-term positives are also seen. Yeah, there is some resistance, but the stock looks good. So buying JSPL at around 164, stop loss 160, target 172. And the second stock which I like is MCX, Agam. We've posted a fresh almost 7-week high today. Not 7 weeks, sorry, 4 trading session high. And it looks like overcoming this 7-week high. So buy on, and indicators have turned positive on the daily and weekly. So buy at 740, stop loss 733, target 754.
Yeah, I think today a couple of sectors seem to be doing well. One of them is the metal sector, as you pointed out, JSPL. Most of the metal stocks are doing well, and SAIL has joined the party also now. SAIL wasn't doing as well as it was as the others, but SAIL has now moved to the highest point of the day. The other pack is the NBFC pack that is led by Dewan Housing, which is up almost 4% in trade. And a couple of pharma stocks have started to do well. So counters like Sun Pharma had moved to the highest point of the day. Counters like DV's Lab, counters like Biocon. So watch out for some of these counters. As a pack, pharma seems to be having a decent day. Anything in the pharma sector that you like, Hemen?
I think Sun that you mentioned was looking interesting simply because you know, we've been trying to work on this 433 level. And I think this is the first, second, third, fourth week in a row that we have not been, Darshan, we have not been able to overcome Sun Pharma's this level. But yeah, I think extreme near-term positive. Then we overcome 433. I think we'll see a smart jump coming in a jiffy. And if you look at the Nifty Pharma Index, it's come off pretty well over the last few trading sessions. And then now we are consolidating sideways, and now this Nifty Pharma Index is on the verge of a mini breakout. So I think the bounce, as of now it's a bounce, but the bounce is still looking like continuing.
Okay, on that note, let's bring in Sumeet Bagadia of Choice Broking, who is also joining us on the show. Sumeet, good afternoon. Thank you for taking the time out. What is your view on the benchmark indices? We are seeing some amount of resistance around 10,900, but are you constructive on the indices? How would you play these?
Hi, good afternoon. Well, yes, our view is bullish on index. We are expecting a good upside move in next couple of days. In fact, in the year 2019, in next couple of months, we are expecting a very good up move in index. As far as trading view is concerned, one can initiate long positions in Nifty at the current market price. If there is a dip of around 20 to 30 points from present levels, then that should be used as a buying opportunity. Downside, Nifty has supported around 10,800 levels. Till the time these levels are not taken away, it's better to be on buy side. And on high side, one can expect levels of around 10,950 and then 11,000 levels in next couple of days. So for a trading perspective, one should initiate long positions in index at the current market price.
And what about the Bank Nifty, Sumeet? How are you seeing trends there?
Same is the case with Bank Nifty. Bank Nifty is also looking good to me. We are expecting an upside move in Bank Nifty in which we can see levels of around 27,500 or 27,600. That would be the immediate trading targets. Once the levels are taken away convincingly, we will see a upside move till 28,000 levels in next couple of weeks. For a trading perspective, one can initiate long positions in Bank Nifty at the current market price. If there is a dip of around 50 to 100 points from present levels, then that should be used as a buying opportunity with a stop loss to be placed at 26,900 levels on lower side for the upside target of 27,500 and 27,600 levels.
What about stocks, Sumeet? Which are the stocks that look attractive to you today?
Few stocks are looking good to me. Metal stocks are looking good. In fact, among all the metals, Vedanta is looking good to me. Vedanta can give a move till 215 and 225 levels. It's looking good at current market price, and there is a very good risk reward ratio if one initiates long positions at the current market price. 195 should be the stop loss for long positions, and on the higher side, one can expect targets of around 215. And if 215 is taken away, then we can see extended move till 225 levels. So for a trading perspective, one can initiate long positions in Vedanta at the current market price. The second stock that looks good to me is from cement space, and that is Ambuja Cement. Ambuja Cement looks like that it can move up till 235 or 240 levels. One can initiate long position in Ambuja Cement at the current market price. If we see a dip of around 3 to 4 rupees from present levels, then that should be used as a buying opportunity. Downside, the stock has support at around 216 levels. So that should be the stop loss for long positions for the upside target of 235 and then 240 levels in the next couple of days.
Right. Okay. We'll, on that note, bring in Sharad Dubey, who is, as usual, standing by to give us the most buzzing stocks in the trade today. Sharad, good afternoon. What do you have on your list?
Good afternoon, Agam. The first stock I've picked up is Asian Granito, which is down by almost 8% today. It's lowest level seen in 2 weeks. This is based on the news that promoter and MD Mukesh Bhai Patel was arrested by Directorate of Revenue Intelligence. The promoter was arrested with a case related to an amount of around 3.5 crore rupees. But as of now, the company says the promoter is out on bail. The second stock I've picked up is Credit Access Grameen, which was down by more than 1% today. Its lowest level seen since the third session. The company had actually risen by around 1% and has risen by around the third straight session. This is based on the news that the company had completed a direct assignment transaction of 176 odd crore rupees. Apart from this, the company has done 5 securitization transactions and 2 direct assignment transactions totaling around 909.7 crores in financial year 2019. The third stock I've picked up is Manali Petrochem, which was down by almost 2%, its lowest level since since December 12. The company has clarified that there is no strike or lockout and there is no insurance cover based on notice received from the Pollution Control Board for closure of Plant 1 on December 25. The company also stated that the quantum of loss would depend on the period of closure, and the company has also taken actions for an early restart to recoup the production loss. So these are the three stocks, Agam.
Okay, many thanks for that, Sharad. Sanjiv Bhasin of IIFL joins us on the show. Good afternoon, Sanjiv. What are you telling your clients? It will be because of holidays. I think most of your clients may not be there, but overall, what's the sense that you're getting? What are you, when you talk to your clients, what are they telling you? What are you telling them?
So this year has been all of buy the fear, sell the greed, and we continue to think 10,300, 500 is a very, very strong place to buy. On the Nifty, we think 11,400 could be hit in January. We think the earnings will be pleasantly surprising on the upside with the momentum because of input cost fall and so on, and macros are improving on all three counts, whether it's rupee, bond yield and oil. So we are selectively buying into stocks where we think mid caps can relatively outperform. If I could name 4-5 large cap, it would be ITC, L&T, Axis Bank, Eicher and Hindalco. And in mid caps, we are very bullish on CG Power, MGL, Ashok Leland, NBCC, Nagarjuna Construction. We are very bullish on the capital goods stocks with the Siemens and Cummins being two of our top picks. And so on. So we have a whole list of stocks and we are advocating, we think mid caps will outperform in the next 6 months, and that's where you should be putting your money.
Just one thing, you said 11,400, that means a potential 500 point up move in the next 30 days in Jan. Am I getting this right? Is that what you said?
Correct. Once you cross 11,050, you can have a shot at 11,400, and that will be part of being an outperformer in the global indices. India is truly outperforming, and I see no let up. I think January will see a lot of build up before the budget and so on, and globally I think we are bound for a rebound in the US and other indices. So if oil pullbacks a little, we think that will be good, and we think Nifty can regain its mojo and test 11,400.
All right, Sanjiv, what we've seen is a lot of traction in some of these NBFC names which has returned off late recently. We've seen a lot of traction in Indiabulls Housing Finance, a lot of traction in some of the other housing finance companies in general. And then there's the likes of Ujjivan Financial in the micro financial space is also which is starting to move. How are you reading this area, and what would you advise your clients to do?
So as a disclosure, we were on your channel and we advocated to buy Indiabull at 710. We were very bullish on Equitas at 105, and those two have been relative outperformers. We still think that NBFCs may outperform on the back of lower bond yields and a lot of the corrective measures which RBI is proposing. So LIC Housing, HDFC, Group Finance, Mahindra Finance, all these will stand out. Equitas, Ujjivan will do well on the microfinance. And I think Indiabull on any correction would be a buy. As a disclosure, we've had a huge buy at 710. The stock has been a huge outperformer. We have a target of 950 in the next 2 months.
Some of the stocks that you named, Sanjiv, at least let's start with the mid-cap front. You spoke about counters like Crompton, CG Power, you spoke about NCC, you spoke about NBCC. What's the theme with a couple of these counters? Let's talk about NCC. It's down 35% from its all-time high. What do you like about it, and why do you think a reversal will happen?
So it's clear if you see the numbers and the guidance from stocks like Siemens, Cummins, L&T, they are telling you that the capex is rebounding very strongly. And we think construction activity is going to pick up very, very strongly before and after the budget. NCC and NBCC become very good proxy plays on execution. So they've had a good order flow, but execution was a problem. And now when you have input costs falling, we think NBCC has been one of our top picks at this 55. We think that could be a relative outperformer. Nagarjuna Construction, on the back that it's large road portfolio, they are going to see a lot of encashment on that. They're going to, return on equity will improve as they reduce debt. And we think that this lull in infra activity is going to see a huge pickup. So whether you play it through the roads or you play it through government, where NBCC has most of the share of government reconstruction, and on 21st January anyway they are going to get the government, the High Court has already ordered that they'll be able to get back into their mojo. So I think these will be a lot of wealth creators, since they have been wealth destroyers in 2018.
About CG Power, because ever since they sold their consumer business, every step that they have taken is a wrong step. Somehow, whenever they try to do, they sold some of their units, but somehow the market doesn't seem to like CG Power and what it does. What do you like about CG Power? What's the theme that you're playing?
So in the electrical, in that business, they have a very good name. It's just that the overseas leverage in Europe has been a drag on earnings, and some of the exposure on the dollar. So I think that is seeing to reverse. They are selling some of their assets in Belgium. I think it should be there in this quarter, and that will improve the return on equity. They are focusing more on the local business, and in that they have a huge market share. They are expected to do very well there. We think power is a very, very strong turnaround, both on the consumption side, the utility side, and on the vertical side. And CG Power will regain its mojo. We have a buy around 38, 39. The stock is 45. We have a target of 68 to 70 in the next 6 months.
Okay, Sanjiv, come in on the metals pack also, which has picked up some steam today. But in general, how are you distinguishing the ferrous side of things from the non-ferrous metals? What are you telling your clients?
So yes, this has been again one of our contrarian plays at 10,500. Tata Steel at 510, JSW at 295. Hindalco at 215 and 195 on Vedanta. This is how we are playing both that basket of ferrous, non-ferrous. We think that once you get more headway on the China factor with Donald Trump, we think the protectionism will be back, and we are anticipating again that there will be a strong build-up globally on users of commodity. So we think commodities are going to do well, and this fall was a buying opportunity. We've given you all the four as a disclosure. We have a buy on most of those four at lower levels. We think they can give you a 20% upside in 2019.
Okay, well, Sanjiv, hold that thought. And while white goods sales may be slowing down, is one of Mumbai's largest offline retailers, Vijay says that it has had a mixed Diwali, and that the months of December and November have actually seen a little bit of a drop in sales. This is what Managing Director Nilesh Gupta is saying about the quarter gone by and what we can expect going forward. Listen in.
We had a reasonably okay Diwali. I would not call it a good Diwali. We expected around 8 to 10% growth, but we ended up around just a single-digit, low single-digit growth.
Oh, okay.
And December has not been a great month, which is a very big surprise because there were no changes which happened where December should have been a poor month. So maybe in anticipation, people have not been buying, or actually it's out of our mind. We are not able to put a reason to it. Okay, cause, what's the cause for the low month? But we expect a better next year overall. For the simple reason is the rupee seems to be stable now. In fact, it's getting stronger, not only stable, it's getting stronger. The crude oil prices are not going up, they are coming down. And I've always been saying one thing, that consumer durable industry is only based on sentiments. Because we are not in a segment where people will think twice buying a television or a refrigerator or air conditioner. 20 to 50,000 rupees products average pricing is there, and that too 60-70% is going on a EMI basis. So it's only upon sentiments, and I think if the oil remains steady, the dollar remains steady in the coming year, I think the sentiment will only go up, and we should have a reasonably good year, at least a better year than this year.
Okay, wow, 2-3 frequent indicator points from you. So if Diwali was the first point, if Diwali wasn't great and if December hasn't quite turned out to be as good a December as usually is, Is it across the brands and across products, say from maybe cell phones, because I keep on hearing you saying that cell phones are a different breed altogether, but the other products, has it been a marked slowdown across products?
Yes, there's been a marked slowdown across products. In fact, the footfalls have gone down. So that is something which we are not able to pinpoint. What is the reason? Because nothing changed. It's not that the taxation went up, prices went up, or the industry remained the same.
And it's not that online sales have increased.
No, even online is struggling. What I get to gather from the brands, December, even the online has been struggling a lot. So ultimately, and it's a very big surprise. How come all the consumers decide to slow down their purchase, and all of a sudden they decide, let's go together and buy together? It always happens. They just move together.
Okay, some stocks that are in focus. I think the auto pack is giving up most of the gains. Maruti Suzuki is at the lowest point of the day. Bajaj Auto has moved to the lowest point of the day. Tata Motors has moved to the lowest point of the day. So there is selling pressure that's coming in on some of the auto names. Hemen, are you spotting something on the auto side? Which one, if someone wants to short now, which is the best short on the auto side?
I think the way I look at it, Maruti should be an interesting short, Darshan.
Okay.
Because
why?
We're on the verge of breaking a 2 trading session trading range. The daily MACD then sell mode after reflecting negative divergence. And if I look at it, the 60-minute MACD is on the verge of signaling a sell. So the level to watch out for in the cash market is 7480. I think that cracks. I think it would be a clear 150-point drop from here. Darshan.
Okay, some of the smaller banks have managed to do well. AU Small Finance Bank is up 6% in trade. Aavas Financiers has moved to the highest point of the day. So some of these smaller banks have actually started buzzing in trade. Sumeet, anything on the banking side that you like, especially on the NBFC side? Sumeet, that was for you.
Can you please repeat the question?
Anything you like on the NBFC side?
Well, see, NBFC side, most of the housing finance stocks are looking good to me. I think immediately LIC Housing Finance, one can initiate long positions in the stock at current market price, and downside the stock has support at around 475 levels. Till the time these levels are not taken away, it's better to be on buy side. And on high side, once the stock is able to break 495, 500 levels on closing basis, we will see a move till 530, 540 levels.
Okay, I'm going to come back to Sanjiv on the concern that was raised by Nilesh Gupta with respect to the slowdown in sales in the month of December specifically. Sanjiv, as the head of one of India's largest retail branches, he was mentioning that December and perhaps half of November has also not been that great for them. How are you reading cues when it comes to some of these consumer durable names with respect to the third quarter? We're also coming to the earnings season. What is your expectation here, and what is the likelihood that we can see turn out for some of these consumer durable names?
Well, I think we've had a late Diwali, and there may have been a mismatch in a little bit of footfall. Plus, you've seen some of the rub-offs of the state elections and so on. But I think that is hardly material. You've seen huge farm waivers being announced. The practicality is that it may not reach the end. We've seen that in the shape of Karnataka. So all that was a feel good. But I think January onward, you should see strong rebound. In consumer durables, if you want, we've had an overweight on Havells and Bajaj Electrical. We think those are two prime names. You can add a Whirlpool if you want to play the white goods. But the idea is that these stocks are on all corrections are bought very aggressively, and they don't leave any room on the much room for appreciation, in the sense that 550 Havells is now 720, and that's the reason we are not chasing those stocks. We still think that consumption is a strong play, whether it's discretionary or the staple side. But for us, it would be Nestle, Dabur and ITC. ITC would be something in the FMCG basket which we can advocate even at this price to be bought for a 25% upside in 2019.
Okay, why do you like ITC? Given the fact that, you know, even ITC hasn't given much of a return. If you see HUL and ITC, while ITC's revenues are almost much more than HUL, and even the margin-wise, ITC does well. Market cap-wise, HUL both are similar, but HUL somehow always managed to outperform ITC. Is there some issue that's holding back ITC?
Oh yeah, there are three questions to that. One, ITC is gaining in market share and volumes on the FMCG side. They did 14,000 crore last year, and this year they hope to, you know, increase that by 30%. Secondly, their margins have been very, very low, 1.5%, and that they are going to see a lot of accretion. New product launches in frozen foods, in dairy have been very, very strong. ITC Haryali is doing extremely well. ITC Bhadrachalam in the paper business is doing very, very well. That's the third largest player in the country. Starbucks is the, you know, all the cups which you use on your coffee are all recycled by ITC. ITC Hotels is going to be the largest franchise player in the country. The cigarette business, despite the import and the smuggling, is doing relatively well, and we think those margins are on a decline. They could stabilize. So sum of parts, ITC gives you the perfect choice. The stock may have underperformed in the sense that it's not done much, but it has not even corrected much. So this 275 to 80 are very, very favorable. We think 350 to 375 in 2019 can be on the cards.
Okay, Sanjiv, before we let you go, one quick final question. Among all the stocks that you said, and there could be more, as a house, which is the top bet for 2019 that you've told your clients that, you know, buy the others or don't buy the others, fine, but you have to buy this stock?
No, it's a basket of stock. Asian Paints, Axis Bank, ITC, L&T. These are all top of the charts on the large caps. We still think they'll make money. NBCC is something which I'm very bullish. I think that stock can easily touch 90 to 100 levels in this year. It has underperformed in last year, and because of the court case and so on, and all those things will be bypassed by the end of January. We think the order book, the construction in tier 1, tier 2, all are you know, shaping up very well, and earnings should pleasantly surprise on the upside.
Okay, Sanjiv, we'll leave it at that. Thank you so much for joining us and taking us through your views in the markets. And of course, have a happy new year and wish you the best. But moving on, there is one stock that I want to pick up on. That's Mahindra Holidays. Well, earlier in the morning, we had our colleague Yash Upadhyay who presented the Bloomberg Edge on it, and which was suggesting that you know, it had broken above the 21-day EMA, that's the exponential moving average, and it's been doing well actually. It's in fact it's been advancing, and it's seen some strong gains over the last couple of sessions as well. It's currently at about 212, 213 odd levels. I'm going to take a view from Sumeet on this one, considering it has moved above its 50 daily moving average. Sumeet, how are you reading trends on Mahindra Holidays, and what would you advise our viewers to do with this one?
See, in last 1 year, we have seen a one-way correction in the counter from the levels of 350, 360. We have seen a fall in which the stock has now taken support at around 195 levels. I think the stock has made a base over here, and from here on, there is a possibility that we might see a bounce back or a pullback move. It seems like the stock has made double bottom. From here on, the bounce back and pullback move can be seen till 230 levels. Now that would be the immediate swing high and resistance for this stock. Once the stock is able to break 230 levels on closing basis, that would be the confirmation of this. That would be the confirmation of this bull trend. I think one can initiate long positions at the current market price, that is 212 levels. If there is a dip of around 5 to 7 points from present levels, then that should be used as a buying opportunity. The immediate target would be 225 levels. A closing about 225 will take stock prices to 260 and 270 in the next couple of months. One can initiate long positions in the stock at current market price.
Okay, a few stocks again I want to highlight. Alkali Amine Chemicals has moved to the highest point of the day and at record highs now. 811 is where the stock is trading, so that's done well. And Ramakrishna Forging continues to surge ahead in trade today. That's also has a sharp up move in the last few minutes of trade. So Ramakrishna Forging has managed to move to the highest point of the day. There is traction that's happening on the counter. Surprisingly, again, Kotak Bank has moved to the highest point of the day. Hemen, what should one do on Kotak Bank? Are you looking at anything? Is the chart looking interesting? See, there is an event risk that will always be there, because you don't know what will happen, what the RBI will say, whether there could be a possibility nothing will come out. But what are the charts saying? Ignore the news. What are the charts saying?
They're looking positive. They are looking surprisingly positive. 1235 needs to hold about 1260. We are looking at a further upside. And the other stock you mentioned, Darshan, alkyl amines, I think.
Alkali amines.
That looks interesting. I think 810 is the all-time high. We've tested that today, or we've just about overcome that. And I think we're heading towards 850 and more.
Okay.
Okay, well, on that note, we're going to slip into a short break, but on the other side, we have the FAP 4 stocks of the day, the dealing room check at 3:15, and of course, your closing strategies. So lots more lined up. Stay tuned in.
What will be my contribution to the world? I wonder. Will the things I created
pass the test of time?
Or maybe they'll lay the foundation for something new? I hope my ideas survive.
I've had some great ones.
And there's still
so much left to do.
Who knows what life will bring?
The road is long.
The journey full of promise.
The pursuit
only just beginning. A series of exceptional stories about exceptional people whom time won't forget. Pursuits by Skoda. Coming soon on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday.